In today's video, I want to talk to you about two particular coins, one of which has been voted from a poll, and this is called Keen, and the other one, which the second actually on the vote down the list, was ADA. So Keen has had an explosive move on the upside over the past few days, I would say maybe even weeks. And it's particularly interesting because along with Ethereum and Bitcoin is the only one that is not considered as a security. And the other one, obviously, ADA, you all know, the competitor or the one that is going to dethrone Ethereum, which in my case, I don't think is going to be the case. But either way, it has a lot of potential as well on the upside. Okay, so we're going to analyze both today using our Elliott waves, of course, on cryptocurrencies. And we are going to, of course, offer an educational video rather than anything else. So this is not to be considered investment advice. As you all know, I love to use the logarithmic charts because they make more sense, especially in the cryptocurrency market. So we're looking here at the 4-hour Keen is the one that we're going to start today. But you can see that we don't really go back much in time. I mean, the data start from the 23rd of February 2021. So instead, what we're going to do is we're going to have the coin market cap because it includes all the data. We can see clearly that we started back in like September of 2017. So we're talking about 3+ years over here. And we had an all-time high at like, where was it? I cannot really find the top over here. But anyway, we're looking about like a fraction of a few cents here. Yeah, we had a top though. That top, guys, is considered as wave 1 in the primary degree. Okay, which means wave 2 is down here. Okay, so as we move up now for wave 3, there's very good chances, if this is going to continue as we expect, that we're going to break the previous top in with wave 3. Where we're going to go, we're going to analyze soon. But before we get there, and if we just zoom in a little bit more, recently what happened, we ended the intermediate wave 1, yeah, and from there 2 as well. So which means now we are in intermediate in wave 3, and looks like it's going to have to be a multi-structure move considering how low we are and where was the previous high. Now, on the charts, you can see that this is exactly where we ended the minor wave 1, right? The intermediate, excuse me, wave 1, which means now, yeah, we are in wave 3. With that said, guys, internally, I see a structure that this is 1 and 2. This is going to be a 3. We're going to get a 4, and we're going to get a 5, yeah? And this, in my opinion, is going to be minor wave 1. Then we're going to get 2, 3, 4, and 5, because I will tell you why. Because, guys, 1 second. If you see where we were before, the high was at 0.00078. If we are doing a wave 3, it means that we'll have to break above that level. Okay? And if we break above that level, it means that we need to get to at least the 161.8 Fibonacci expansion of that. Okay, so from 0 to 0.0078, the 161.8 expansion comes at 0.0012. Okay, so wave 3, that's where I have 4 here. Yeah, in the minor, in the intermediate here, it's possible that we're going to get it to go to at least 0.0012. Okay, now how we're going to get there? Obviously, this is a long-term process, right? But if we take into account this channel over here, it's very likely, guys, that in here we've got 1, 2, 3, 4, and 5, yeah? And we're going to get then the 4 and the 5 up to the 200 Fibonacci extension. This is what I'm looking now, okay? Because we also place the Fibonacci over here from down to 0 up in intermediate wave 1, yeah? And we use the expansion levels. We actually came near the 138.2, which to me means that this is 1, 2, 3, 4, and 5 internally. Yeah, we're going to get a correction, and then we're going to move up for wave 3. Then 4 and 5 for wave 1. And you might ask why the 200 Fibonacci extension of intermediate wave 1? Because otherwise, guys, I will find it very hard that we extend up to the 423.8 or even to the, which is at 0.0011, or up to the 161 of the primary degree Fibonacci expansion. That makes more sense. You know, there is no way we're going to get up there if we don't have a wave 1 at least at 0.0005. Okay, that is the exact reason I'm looking at, an impulsive structure within that structure. Okay, now with that said, guys, and since we are over here and looking at the 100 Fibonacci over here, which is wave 1 and 2, look at this. Over here we did like the 50 Fibonacci, okay, in wave 2 nearly. What this means is that once we get wave 3 in, and if we assume that wave 3 is going to be 0.0011, then we have to go to the top. No, excuse me. We have to go to wave 2. Yeah. And then go all the way up. Excuse me 1 second. I just want a bit on the side. Go all the way up and do the other 50. We care about seeing that 50 there. So a potential correction would be 0.0006. Okay. Now you might think this guy must be crazy calling a new high, but we are really looking at the long term, guys. Okay. If you want me to go a little bit lower down, yeah, again, I will be looking, and since prices broke above the median regression channel, yeah, you see that? It's very important that we stay above that level. So I will be looking, yeah, the 1, the 2, and down here. The 161.8 Fibonacci extension, we need to break that in order to consider an upside move for wave 3, okay? Wave 3 is not really necessarily, it doesn't really mean that it has to get up here. We would prefer, even wave 1 it doesn't mean, but we would want wave 3, okay, to find, you know, when prices go up in time, we would want wave 3 to be the one that is causing a rejection for down in wave 4. That's why I'm looking at this up here, okay? So as I was saying, since we broke this level here, the median regression, guys, yeah, and hold on, let me just pull that again. We're looking at the 1618, and then we're looking at 2618, 3618, and 4272. And you see, this is what wave 1 is bringing us, because it will really depend where we end when we have wave 3 in. If wave 3 ends around the 0.0047, then it's very likely that wave 5 is going to end around 0.0005. If wave 3 ended here, because it could be a case, then we're going to probably get a correction down here, since this is also a 5-wave move. And that correction is going to bring us back below the median regression. And this is what is going to start causing a little bit of a concern, because it could be a case where all of this, it's an A, you know, B, and a C, which means, you know, we're not even going to go anywhere higher. And we're going to stop like around here. That is going to be something like an A, B, and a C. Okay, which means it's already done. But I doubt this is going to be the case, given, of course, the use case of kin. Okay, so I'll be looking at 0.00337 to see whether prices are going to break higher or we're going to get a correction in wave in minor wave 4, in green wave 4. Okay, and that will be all for kin. Now for other guys, we are looking at the 4 hour over here. Perhaps it might be a good idea to go a little bit further out at the 8 hours to see where exactly we are. Okay, so we've got 1 and 2, and we're looking for primary wave 3. Internally, we've got an intermediate degree structure, which is the red ones. And within that, we've got a minor degree, which is the blue one. And the blue one, here's the interesting thing, guys. The blue one broke outside the regression channel, which means that it's very likely that we're going to stay above that regression channel like ever again. Okay. However, we did get the 461.8 Fibonacci expansion here of, which one is it? Of primary wave 1. Yeah. Because we had a move all the way up here. Yeah. So we'll go up here, we draw Fibonacci retracement down to 0, and we get the 461.8 Fibonacci expansion at 140. We did this. Okay. And this is a very good level, because intermediate 3 wave should have ended. I mean, it would ideally be the primary wave, but since we are very impulsive and we entered outside this regression channel, yeah, in the lower degree, we can use the higher degree expansions in order to determine some good levels. Now, going back to the red one, the intermediate degree, we've had here an ABC and an ABC. Okay, so it's a case, guys, that this can end like being another move on the downside, and we're going to start moving higher over here in 5. Or it could be a case where this is 1, 2, 3, 4, and 5. That is going to be like a triple zigzag, or it could end up a W, X, and Y, which is a double zigzag. And a double zigzag case would be actually good because we would prefer to get a very nice healthy correction down at the top of the ascending channel and then move higher, which is around perhaps a 95 cents or so, or even we can go down to the 78 cents. Now, if you're asking if I'm calling a correction, I'm not calling a correction. I'm telling you that we are currently in a correction, and there is a lot of probabilities that we might have another leg down to get a nice healthy correction before we move back up. Okay, now the question is, once we get the correction, where are we going? Because I know this is where most of you this is what most of you are interested about. What we need to do is go down from 1. Yeah, go 1 and 2. If we take 1 and 2, actually I don't think we're going to get far, yes, but we get the 3. And after 3, let's use the expansion, because we do not have a low yet for the correction. I mean, we do have the 38.2, but we didn't get exactly there yet, and I will explain why it is important to get there. So we're looking at wave 3 to get to 2.9 or even 3.8, which is 161.8 Fibonacci. But that would give us an extended wave 5 here in the red. And we don't want to see an extended wave 5 because wave 3 was extended compared to wave 1. So what we want to do is we want to draw our levels anywhere between 2.4 and 2.9. This is going to be where wave 5 is going to end, and wave 3. And then we're going to get another correction, and then we're going to get, after wave 4 is in, we're going to get the wave 5, guys, okay? 2.4, 2.97, 3, let's call it. Now, why is this level important? As you can see, the Fibonacci retracement from 1 and 2 is the 61.8 Fibonacci retracement. So in order for us to use the rule of alternation properly, we need to get the 38.2 Fibonacci correction over here. You might say, well, dude, we just missed it for like a tiny bit, which is okay. Yeah, understood. But we're a cryptocurrency market, so usually I would expect the 38.2 to become a 50 Fibonacci retracement, to be honest, especially after the fact that this is not exactly the 61.8. So you could call it a 50 and a 50, or 55 and a 45, something like that. So it's very likely that we're going to get another move on the downside before we correct higher. Okay, I'll be looking at the 139 break on the upside. On the downside, I'm looking at a double bottom at 0.95, or perhaps a double 3 at 0.78 to confirm the validation on the upside. If we break below and we get back within the channel, guys, things are going to get a little bit more complicated. Okay, so this will be all for the day. I hope you enjoyed the video. If you did, I would appreciate if you appreciate with a like, subscribe, turn your notifications on, because these opportunities are very important. So thank you very much for watching, guys, and we'll speak again shortly.